SoFi's Q3 earnings results are right around the corner. August 28th in the morning to be exact. And yes, we'll be live streaming those earnings as we have in the many years prior. I've been covering this company since 2021, and doing a quarterly earnings prediction has been a staple on the channel. And we've been extremely close on our estimates. I've held this company since it was $4, $7, all the way up till today around $28+ a share. Let me tell you guys why I think it's going to continue to go higher and where my next price target is set at. First up, we have to see immediately that members is growing at 980,000 new members this quarter. That's my prediction. It's extremely high and an acceleration year over year of new members. They've been growing in the 34% ranges for a long time, and I think that's going to break this quarter, very surprisingly. In products, what we also see is that products per member is also looking to accelerate, which is going to lead to products of 18.57 million, or about 1.4 million new products. By the way, this blue outline that you guys see on this page is my prediction. So that's my assumption. Everything else is a formula. So if we know what the new members is and we know how many products per member, then we can see how many new products and everything along these lines. We can just skip technology platform. I mean, 7.5 million, nothing new there. But adjusted net revenue, I think, is going to come in at $960 million, up 39% year over year. Now, compared to last quarter, that doesn't look as good, growing at 43%. But the difference is the comp. How good are they growing on the last quarter? The last Q2, we ended up seeing growth of 22% in revenue, the slowest growth we've seen in quite a long time. However, Q3 of 2024 nearly grew at 30%, one of the fastest growth rates that we've seen in a long time. In order to grow 39% on a 30% growth rate quarter is absolutely insane. Financial services revenue is where it really is continuing to kick up. $420 million, $26 per financial services product, mainly done by the lending platform, which can be a little confusing, but the loan platform business is actually a financial services product, and all the other loan products fall under lending revenue. That and credit card. Credit card's also a financial services product. But this is expected to grow at 76% year over year on the comp of 100%. So they doubled last year, and now we still think they're going to grow by another 76% on top of that. Lending is expected to grow at $476 million, or based on $195 per share, an increase in average revenue per product quarter over quarter because of home loans. Home loans is really going to tick up this quarter. That's an absolute huge revenue product. Technology revenue going to stay pretty flat. It's probably the hardest one to assume, okay? And then corporate revenue of negative 50 million. Just putting it at 50 million, it's very hard to assume as well. Contribution profit, let's just take a look at all of this together. I think this is going to be the highest contribution profit that we've ever seen across the board at 54%. Not only do I think there's going to be an increase from the tech platform, I also think there's going to be an increase on lending and continuously an increase on financial services. So a very high 54% contribution margin to a total of $520 million. But for what you guys all care about, let's talk about earnings per share. Adjusted EBITDA really quickly, $316 million or 33% margin, and then net income of $146 million at a 15% margin. Huge increase on the margins this quarter, okay? Leading to EPS of 12 cents. That's a very exciting quarter if we can reach that. And that's on top of a much higher diluted share count because they did a massive dilution to accelerate growth rates. That's why we're seeing better margins. That's why we're seeing better growth. They've put a lot of money towards accelerating these types of objectives. And just to show you guys what this looks like, look at the ramp over time of revenue each and every quarter for SoFi and the massive increase in like the spike up of what I'm expecting this quarter. This is going to be based on somewhat by website traffic, but honestly, it's the downloads that's really accelerating this growth. The tech platform going to see some growth, but obviously we've seen some pretty negative quarters previously. I'm not really worried about that. Total members, insane acceleration here. Another record-breaking quarter is expected, 980,000 new accounts. Then going to lending, we ended up seeing this massive ramp going from Q1 of 2024 all the way up. But now there still is an acceleration. This is still 20% growth rates. It's just starting to be on really good quarters. It's not like we're growing off of 2.8% like we did last quarter. Now we're growing off 13.5%. It's much harder to grow off these good comps, and it's going to continuously be hard as we accelerate through the rest of the year. Financial services, look at the ramp here, guys. I mean, has there ever been a chart this beautiful? This is just insane. So we look at Q3 of 2022. So this is a few years ago. $48 million, nearly $49 million. This quarter, we're doing $420 million 3 years later. Adjusted net income, we're expecting an insane ramp here, and highest margin, highest amount of new adjusted net income, and adjusted EBITDA also going to be at the highest margin and highest growth we've ever seen. Now, Q3 product predictions. This is how I end up bringing down and breaking down all my numbers. Because if we know all the different products that we're going to get, then we can get really accurate assumptions of how much money we're actually expected to make. So understanding those trends, in my opinion, is very important. Let's first go ahead and look at personal loans. Where personal loans, you can end up seeing that growth here is expected to be still very strong. About 143,000 new personal loans, or 10% of the outstanding new products, which would be the highest ramp that we've ever seen, or highest amount of new products. I don't think anything's going to change on the originations per loan. So we're looking at about $7.4 billion of total originations. Home loans, however, huge ramp here. 5,700 new home loans, by far the biggest ramp we've ever seen. 0.4% of the outstanding products at a 200,000 originations per loan leads us to the first $1 billion quarter that we've ever seen. If we go ahead and crawl over to this side, what we can end up seeing is personal loans end up ramping up to brand new highs. Growth rates still looking good in that 8+% range. Home loans end up ramping. I mean, look at this growth rate, guys. Seriously, it's been nothing but up and up and up. And I don't think that's going to stop. 48,400 new home loans. This is the largest total addressable market that SoFi could ever go after in the lending space. So for them to ramp here really shows that they mean business. Personal loans, nothing really exciting here. We don't even have to continue talking about that. SoFi Money, however, I think this is going to be really exciting. 33% of outstanding products to bring in one of the largest quarters we've ever seen. 475,000 new accounts. Compare that year over year. They were doing 48% of total new products was SoFi Money, and yet that was only 421,000. I think deposits might slightly grow this quarter. Obviously, with bringing on so many new customers, it is hard to continuously grow deposits, but there's been a lot of vintages, a lot of cohorts that have come over to SoFi that continuously get more and more new products, and the expectation is that they are going to continuously get new products over time. So I think that what we saw here, this acceleration in deposits, is what we should expect. I think Q2 was a blip, okay? So a return back to growth in deposits. We see student loans being decent, growing by 2.4% on a quarter-over-quarter basis, where money, SoFi Money, growing 8.1%. An acceleration, absolutely insane. To invest in credit cards, we end up seeing Invest obviously doing what every other bank in financial technology company has done. Huge acceleration in investment products and brokerage this quarter. I don't expect SoFi to be any different. Credit cards, look at this ramp here. Q3 of 2024, 4,000. Next quarter, 14.4 thousand. Next quarter, 26.7 thousand. Next quarter, 38,000. That is an insane ramp. And that's not any assumptions. Those are the real numbers. Well, next quarter, this is my assumption, 47,000 new credit cards. Everything I'm hearing is that they continue to ramp up new credit cards. This is going to be a very big product for them. That leads us to very high growth in SoFi Invest, not seen since Q2 of 2022. And credit cards being very, very fast growth, also not seen since Q2 of 2022 as a percentage basis, but in sheer like total credit card numbers, we've never seen this before. Lastly, I'll just show the next three off at the same time. Referred loans. SoFi has such a high appetite for loans. We cannot fit it all in just ourselves. So this is where Pagaya comes in. We're going to end up referring out some of these loans, and that has been continuously climbing quarter over quarter. 7,000, 12,000, 17,000, 19,000. It's going to go to 23,000. SoFi Relay or SoFi Insights, 34% of new products, nearly 500,000 new accounts. That's nearly double year over year. Now, SoFi Insights as a percent basis has always seen pretty high growth. Okay, so this is a product that almost every single customer ends up getting eventually. I think that's going to continue. And SoFi at Work, this is going to be another exciting one. 7,000 new accounts. They're going to see a large ramp there as well. What we end up seeing is that referred loans, obviously, whenever they first brought out the product, we ended up seeing insane growth rates, 60+%. We're not going to see that again. But the actual ramp here looks amazing. SoFi Relay, still growth rates are doing very well. 6 million total SoFi Relay accounts. It's absolutely huge. It's more than 50% of the people that use SoFi Relay. And then at Work, also continuously growing very well. You're not going to see growth rates like what we saw whenever they first put out this product, but we've still been doing very well here. Now, if you guys have stuck around this long, you guys deserve a treat. And that would be my price target after earnings. Now, surprisingly, and I put this on a little back of the napkin math here, on what we expect for 2025, and this is subject to change very quickly as we get the real numbers here, and then I just assume one last quarter. But I assume that EPS is going to go from 31 cents of expectations for full year 2025 to 38 cents. And that is about over a 20% increase, okay? Given the multiple that we've seen on SoFi and what they can end up holding at, to see a 20+% increase on EPS, I think will lead to about a price target of about $35 per share. But then, if there's a company that can constantly break expectations by over 20%, that also deserves a multiple on top of that. So I do think that in the short term, by end of year, that SoFi can end up trading anywhere between $35 to about $38 or $40 per share. Now, this is extremely aggressive. We would need more price targets, and we need them to hit these goals that I had just set, if not more. 1 million new members or $1 billion in revenue, potentially even higher EPS. I don't know how they would get there. Those types of things would accelerate this past my own expectations. But currently, I suggest a $35 price target by end of year. And then by June or July of next year, once we actually see essentially 4 more quarter prints, I do actually see SoFi accelerating to $50+ per share. That's my hope right now, and I continue to invest and hold on to this company for the long-term success that they've brought us. I mean, how can you think that they're going to not execute after potentially following them for 3+ years or 4 years and seeing them beat on numbers every single quarter since being a public company? And now we have every tailwind at our advantage. Credit cards are doing well, home loans, personal loans, student loans, the loan platform business, their money, their SoFi Invest that's finally delivering on products. Everything across the board is working. SoFi at Work is working much better than people would have expected. So yes, I remain extremely confident, very happy shareholder, and can't wait to see what the future of SoFi looks like just over the next couple months and over the next year. Thank you all so much for watching. Really do appreciate your time. But bye for now.